Don't be surprised if big news comes soon for Tesla stock. It seems like big money may already know something that we do not. The last time I made a video like this was on April 26th, and what happened the next day? Tesla stock was up over 15%. Not necessarily saying that that's going to happen again, but we're seeing similar characteristics between then and now. And that's why I'm making another video, to explain exactly what I'm seeing. And I'll tell you first and foremost, there's really two reasons for this video. Number one, hedge funds and institutions are making some very bullish bets in the options market for Tesla. Some of these bets even expiring next week, with concentrations around the 185 call as well as the 190 call and even higher than that. The second reason is today is a Friday and Tesla stock is up about 3% today. Typically, this is not normal. If you are a trader going into a trade on a Friday, especially a long weekend at that, there's more risk that is involved in that because anything can happen when markets are closed and you cannot react to your trade or manage your trade. So mixing these two things together, the unusually bullish option positioning, the aggressive near-term expectations of a continued move higher for Tesla, as well as Tesla stock really outperforming on a Friday heading into a long weekend, makes me think that maybe something big could be coming soon for Tesla. After all, one of the biggest pieces, if not the biggest piece of Tesla specific news today was actually some news from Reuters. Yes, it's Reuters, so it could be correct, it could be wrong. Reuters recently has been pretty dang wrong. They do report that Tesla's Gigafactory in Shanghai is reducing output of the Model Y by about 20% through March until June. So if anything, you actually had negative news today and Tesla stock did very well. That's also kind of leading to me making this video. So let's get into all of this information and more. Hit the like button and subscribe to the channel if you have not done so already. It helps push this video out to as many people as possible that need to hear it and hopefully help them make more money as well. This is not a guarantee. This is not financial advice, and you should contact a financial advisor if you are curious about anything that I'm saying. And let me just tell you right now, if you do contact a financial advisor, they're going to say, yeah, don't watch any finance YouTube. They're going to say, put your money in S&P 500 index fund. Hey, I'm just telling you now what they're going to tell you. So let's start with taking a look at some of these trades. Now, you have to also consider there is going to be a premium with these trades as well. Like $100 a contract, $500, whatever the number is. And you have to factor that into the strike price to get the actual break even. So that's what markets are expecting. Now, I'm not going to go over all of the different premiums and calculate all of the break evens, but here you can see 4 trades expiring next week, anywhere from the 157.50 call to the 167.50 call. Factoring in the break evens there, that is targeting Tesla stock in the 181, 182 level for next week. So those are bullish trades, but that's not really what I'm talking about. Take a look at these. May 31st, 185 call, worth $5.09 million. That is a break even of $187 per share by next Friday. And that's a $5 million trade, meaning that if Tesla stock is not 187 or higher, you don't make money. In fact, you'll lose money, and you'll lose all of your money. $5 million. That's not a small trade. That's a very speculative short-term trade. When you see longer-term options trades, there's a little bit less risk there, right? Because you have more time to let the stock actually move. But when you're betting the stock is going to move over 5% within a week and you're putting $5 million on it, that's a pretty confident individual making that trade. Now you have a May 31st 180 call worth $118,000, a June 14th 190 call worth $125,000. That's a very bullish trade as well, with a break even of about $193.57 per share. You have a May 31st, so a next week 180 call with a break even of about 183.50. You have another, let's see, June 14th, 190 call for $128,000. You do have a June 21st, 180 call for $1.16 million. And that's even a break even of $188.30 per share. That's a very short-term trade. A month out is not a lot of time at all. The theta really starts to hurt options about a month out to expiration. Really 3 months out to expiration, but that last final month is like make or break. Check these trades out. It gets even better. In August 16th, 265 call with a break even of $266.71, $266.71. This trade for $112,000. Wow. That's a very bullish trade and short term at that, right? There's less than 3 months on that contract. You have a June 21st to 190 call for $108,000. Couple puts there. You do have a January 2025 235 call with a break even of 242 worth they spent $125,000 on this trade. Look at this, a December 20th 250 call with a break even of almost $260 per share, worth $173,000, or that's what they put into the trade. Here's a January 17th, 2025 250 call with a break even of, again, about $260. They did spend $145,000 on this trade. So the vast majority of option orders today from big money are, one, very short term in nature, but out of the money. If you are a hedge fund or institution, let me put this as clearly as I can. Let's say you have $100 million of cash under management. Well, you don't normally go out and buy out the money call options. You just don't. If you want leverage on a stock, you're going to buy some in the money call options. Maybe a $100 call on Tesla. Maybe a $150 call on Tesla. Because there's going to be less risk involved in that. There's going to be a closer break even, meaning instead of a 5 or 10% move higher in a week to break even, or else you lose your whole position, maybe it's a 1%, 1.5%, 2% move higher to break even and start making money. So I know a lot of retail investors were used to buying out the money options because they're cheaper and we don't have $100 million of cash, at least most of us don't. If you do, feel free to drop a super chat thanks on the video because share the love. I don't have $100 million. So we're used to buying out the money options. It's like normal for us. But if you're a hedge fund or institution, really of any size or scale, buying out the money options is a way of potentially trying to make a relatively small amount of money into a large sum of money. It's very speculative in nature. And normally when you see that kind of option trading or positioning in Tesla or other stocks for that matter, that's usually a sign that maybe big money knows something that we do not. The markets are like Martha Stewart on steroids. A lot of big money just knows things before we do. They get the information before we do. They know people. Maybe they know, executives at Tesla or people in management roles that they, talk to that maybe know of, news before, the markets do. And they go in position for that ahead of time. And you see this time and time and again, just, someone, Nancy Pelosi or whoever it is, just pick on her husband a little bit. They'll go out and they'll make a trade in a stock. A month later, big news comes out. A week later, news comes out. And that stock does very well. They already knew it was going to happen. Well, same is true when you look at hedge funds and institutions more broadly. They have more information than we do. They get the news before we do. And they trade before we do. That's why the house always wins. Well, The house always wins because they always get the information before we do. The single biggest thing we can do to try to judge if maybe hedge funds, institutions, someone, with more capital than we have knows something is looking at the option activity. When and if you do get option activity that looks like this, that is short-term in nature, that is large, that is speculative from hedge funds and institutions, that's about as clear of a sign you can get that maybe something big could be coming soon. If you look at option positioning for next week, you do have open interest to the call side of 61.77%, open interest to the put side of 38.23%. Volume today, 62.78% calls and 37.24% puts. I will also remind you, for anyone that does not know or has forgotten, Tesla has a very high short interest as well of almost 4%. Almost $19 billion currently sold short, and 106.69 million shares that are currently sold short. That means short sellers lost about $600 million today alone, let alone if the stock does go through some kind of big upside move. They're going to start losing a lot of money quickly, and this can be a big source of buying pressure on the stock. And then kind of what ties all of this together is we're heading into a extended weekend, right? Monday, there's no trading, Memorial Day. Have fun, guys. But there's a lot of risk that is associated with weekends and extended weekends at that. There's this term called down Friday, down Monday. That means if stocks or a particular stock is down on Friday, it's probably going to be down on Monday as well. That's really a combination between, hedge funds, institutions knowing something, maybe positioning for that on Friday, and risk in holding trades over the weekend. Also worth mentioning, for any of these hedge funds or institutions that are buying those weekly options that expire tomorrow or within the next couple of weeks, there is also theta decay over the weekend, and it's a 4-day extended weekend. So you're already taking, in some cases, a 7-8% theta decay or more, 10, 15, 20% decay just by positioning today alone, especially for those options that expire by next Friday. So that, when you put that together and you sit here and say Tesla's up 3% on a Friday, extended Friday at that, with very bullish option positioning, and if anything, slightly bad news today, I only come to one conclusion, and maybe that is something good could be coming for Tesla stock that big money already knows about that we don't quite know about yet. Now, the flip side to this is maybe hedge funds and institutions are just speculating. Maybe they have no idea. Maybe they're just buying some trades because they feel like blowing some money. That doesn't sound like what big money likes to do. That doesn't sound very logical to me, and I would be much rather willing to bet on maybe someone knows something. Like, here are your two buckets. On one side, you have hedge funds, institutions doing all of this bullish positioning, risking theta decay 10+% just to make a trade today. You have that on one hand, and maybe they know something, right? That's in your left hand here. Your right hand is they're just speculating for the sake of speculation in a volatile company. I think the odds are much higher they know something that we do not quite know yet. So I would not be surprised if there is some really good news that comes out this weekend. Now, if indeed that does happen, here are the important levels to watch. You are currently above your 20-day moving average, so that's great. Just further, credence to maybe something good could be coming. You want to get above that 180 level. And then your 185 level, that is your 100-day moving average. 188 could serve as some resistance. I don't know, just because your 100-day moving average has fallen now so much. If you get above your 100-day moving average, you might just rally straight through the 188 level. $200, that was your prior gap down on March 4th. That was where we touched as resistance here after that, 15% day that we had on April 29th. You touched $200, you got rejected there. I think 200 will be a level of resistance. Then you run all the way to 213. And then if you break 213, that's where things get quite explosive to the upside. And based on some of these options positions, within the next month or two, we could be above 250. And that would suggest that there would be some really good news that we just have not heard about yet. Now, if for whatever reason none of this means anything at all, you want to watch that 50-day moving average around 171.45. That's going to be the level of support you want to watch, and then under that 161 level. I personally think with a lack of catalyst for our markets now, we don't have much, market moving data. We don't have any earnings left. We're kind of up to the market's devices here for the next couple of weeks. If we do get bad news for Tesla, well, that's the level I would target, that 161, 160 level. Although I think that's pretty likely at this point. With that said, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys would like to trade with us live in real time, check out that link down below in the description of this video. Have a great rest of your day. Enjoy your Memorial Days. Let me know down below in the comment section what you guys are doing for your Memorial Day weekend, and I will see you in the next one.